Hey guys, how you doing? Thank you so much for joining me for another episode of Breaking Bitcoin Market Update. Sorry for the little delay, guys. Just one of those mornings, guys, when we're trying to make everything go as wonderfully as possible. So, of course, I am Justin Wise. I'll be your host today, lead analyst, senior mentor here at Cracking Cryptocurrency. And again, I hope you're doing fantastic, whichever part of this globe that you do happen to be tuning in from. Of course, we do have a wonderful day today. It is Tuesday, March the 26th, 2019. And of course, we see our major assets, Bitcoin and Ethereum, just kind of hanging around there, right around the mid-range support. No significant movements, and definitely not any indications for me to want to be going long. So that's the TLDR. Yes, just to get everybody on the same page here. Yes, still pretty much short across the board. Jake Rezio, what's going on, man? I see you. Professor Wally, what's up, what's up, what's up? Cracking crypto. Hey, if somebody wants to make a soundbite, I'll definitely pop that on for the soundbar. Minister C Politics, what's going on? Wayne Tech. I see the regulars, guys. Turd Ferguson, Matt, Dan, Duran, Cruz. I see Wendy. I see Dan. XRP Moon, nice little day, Ada. Wait, if your screen name is Zerp Moon, I don't think you're allowed to talk about Ada. Third Eye Trader, what's going on? You know, Third Eye Trader, you're a good one, man. You get a wrench, my good man. Bat pumps like Old Faithful. Get the likes rolling, boys. Thank you so much. Bling, bling, blong. Justin, keep sending that nice weather my way. You know, it's nice outside too. But here's the thing. So it's nice today. It's going to be nice tomorrow. Thursday and Friday. Friday is when I'm supposed to leave for my trip to Chicago to go see Scott to get the streaming computer. We're going to be doing some live streaming down there. But just in general, you know, I don't go on trips that often. So when I do, I enjoy them. So leaving Friday morning. And of course, Thursday and Friday, chances of light snow. You know, it's just one of those fantastic things that we get around here, where it's just been the post-apocalyptic nuclear winter to kill all winters. Here we are, you know, toward the end of March, and we just finally had a thaw. It's been really beautiful weather for the last week or so, although yesterday was a little cold-ish. And then, you know, it's like, all right, great. You know, I'm going to be driving in nice spring weather. It's going to be sunny. Oh, the day you're going to leave, light chance of snow. It just never fails. It just never fails. It just never fails. Casey Taylor, what's going on, my good dude? Floyd, I see you guys. Western Knittin, Bitcoin Boogie, Esmalal. It is not going to snow. I refuse to believe this, at least. Hey, you argue with the weather, man. They're kind of like, the weather is kind of like, I don't know, I guess most crypto Twitters, you know, 60% of the time they're right every time. It's kind of like Fibonacci. All right, so let's break this down, guys. If you guys have any questions, feel free to drop them in the chat. I'll answer them as best that I can as we move forward. Looking forward to getting that green screen, and I'm really excited about getting this new computer because it's going to allow me to do a lot of cooler stuff with the stream that I wasn't able to do previously. And it's also going to be an excuse for me to, as you guys know, I do come from somewhat of a Luddite background, right? Which is interesting because I find myself specializing in trading cryptocurrency right now. And we even go around now and give presentations, give introductions to cryptocurrency. I understand, you know, very deeply how fundamentally how Bitcoin technology works, how the blockchain technology works, you know, because I've taken pains and effort and time. I've put in the time and the grind to go through the papers, to read the original white paper, to understand the code and understand the software. And that was not easy for me because I do not come from a programming background. It took a lot of time, took a lot of friends helping me out, explaining things to me. Just similarly with Pine, you know, so people have asked me like, so what is your best recommended, you know, strategy for backtesting indicators, for backtesting a strategy? And I think that if you get good with Pine, and do a nice strategy tester, I think that's a good way. There are other superior methods, most likely, but that's going to be your best bet, just off the top of the dome. And that's what I've put myself to the task of but mastering over the last year. And now I'm able to create my own indicators. Now I'm able to create my own strategies, which makes trading for me simpler. So it's all a process of taking all the information and all the knowledge and all the strategy that I've learned from all the years that I've been trading and putting them into a tool that just makes my life easier. So take time transformation, for example. Time transformation comprises strategies and indicators that I have used for years. And now I'm just able to, through clever code, to imply them into one indicator and one strategy that allows me to see trend, momentum, divergence, and volume at a glance. I mean, it's the most powerful tool that I've seen and that I've been able to come up with for my style of trading, for being able to have all that information at a glance. Anyways, guys, so we've got an exciting day today. We are going to be doing the MMO giveaway, so let's get right into that. Getting over here to the news and stats, of course. This is ended, guys. It ended just right before the beginning of the show. So congratulations to everybody who entered. Congratulations to everybody who entered for their chance to win. We're going to be giving away 25,000 MMO right about now. We're going to be picking the winners right now, and we're going to be sending out the MMO over the course of the day. I've got the development team on speed dial here, so if anything goes wrong, we will have it taken care of quite a way. We weren't able to break that resistance at 3,000. That's all right. We had that. You know, I'm just very, very humbled, very appreciative that you guys are so active, that you guys are so involved, that you guys do come out and take advantage of these things. I mean, we don't get any money for doing these giveaways. We just do this stuff for fun. We do this stuff to be able to give you guys something to do. We do this so that we can just support the community. And again, you know, we've been friends with MMO for quite a while. So no, we didn't get any kickbacks or payments for doing this giveaway. They're just friends of the community. They're good people. They've got a good gaming community over there, and we want to try and help them out as much as possible. So, all right. So we're going to do this the good old fashioned way. We've got the Gleam giveaway pulled up over here. And, all right, you know, caution, guys, Luddite here. So if I break anything, it's not my fault. All right. We've got, okay, MMO coin giveaway. And we're going to go to winners. Okay. All right, here we go. We're going to, 5 prizes left. So we're going to draw winners. Okay, winners to draw 5. Not allow repeat winners anytime. And I wonder if I can spin the wheel. I've never done this thing before. I better not. If I start clicking buttons, I'm probably gonna break something. Don't click any buttons, Justin. Just draw the winners. And then tell us which way Bitcoin's gonna go. All right, drawing the winners right now. Freeman's Cryptoverse, good to see you. Oh, okay, this is cool. There's going to be somebody in the crowd who is not going to believe this if you are watching. But again, this is just one of those things. I just picked them randomly. It is what it is, man. I'm not picking these things manually. All right, so here we go. Drum roll, please. I'm going to click announce the winners in the widget. Yes. Loading. Okay, good. And I'm going to come over here and I'm going to refresh the page. So that was a drum roll. It sounded more like an insanity thing. But there we are. There's the winners. All right, great. We've got, listen, yes, this is incredible. Edward Webb, you have got the lucky streak of Satoshi Nakamoto on your side, man. So congratulations to you, Mr. Edward Webb, Mr. Maximilian R, Minior, Side, and Jack. All right, so congratulations, guys. If this is you, and we are going to be sending emails to you guys because we have that from when you signed up for the competition. How do you do that, man? You can tell me. Yeah, Ed, listen, man. Yeah, how do you do this? Because there are some crypto gambling sites out there that I think you'd probably make a killing on if you're able to do it like this. Right on, man. Congratulations, my good guys. Yeah, congratulations to all the 5 winners. We will be emailing you. Email us back your MMO deposit address, and we'll get that MMO sent out to you guys. So, congratulations, man. We love doing stuff like this. I'm not sure exactly what the next giveaway is going to be, so we're going to have to take a pause for maybe a week while we figure that out with the team. But we always like to keep these things rolling and keep them going. You know, we did the T-shirt last time. Maybe we'll do some more merch. Maybe we'll do I don't know. Maybe we'll do something. We'll do something fun, man. Maybe a coffee mug, because I have been told that if you drink your morning coffee out of the Kraken Cryptocurrency HODL mug, your trades will be 85% more successful, and your personal attractiveness 90% greater. All right, congratulations. Love doing this stuff, man. It's good. It's fun. Again, just as a last little parting thing here, if you guys aren't familiar with MMO Pro, you guys can go check out mmopro.org to check out their gaming community and forum. MMOcoin.pro, which is actually their project, And then if you guys would like to buy goods and services for MMO, if you have MMO, you guys can go over to mmocoin.shop. You can also click the link down here to actually become a vendor. Let's see if it's going to let me because I'm not signed in. But actually, we did add, yep, here it is right there. We did add Cracking Cryptocurrency Premium Trading Group 1-month subscriptions onto the marketplace. So if you have MMO and you'd like to become a member of the Premium Trading Group, you can do that right there. So congratulations, shout out to all the winners. And moving on, we're going to... Oh yeah, sorry, one more thing. Sorry to cram this all in. I know you guys are here for the technical analysis, but... Oh, you know what? I can just type in... Why am I not using the subdomain? I'm sure is what Scott is thinking. So I'll use the subdomain. This one right here. All right, so here's all the questions from yesterday, and we're just going to go on over to randomcommentpicker.com. And boom, boom, and pick the winner. Pick the winner. Why aren't you? Oh, there we go. Mr. Boom Saxit says, love your work, man. Signed up for the premium group, waiting to jump on board. Watch out, coins. Somebody Bob's is coming to get you, then sell you, then get you again. Hey, bro, I talked to you this morning, man. I got you all set up. I know we just talked right before the show. You said you were heading to bed, so that's cool, man. We'll get to crushing it tomorrow. But I already know, because I know who this is, because you did reference your Discord username. I'll go ahead and tip you some crypto in the Discord, man. So congratulations. Thanks for joining the group, man. Looking forward to working with you. Zuhair Nakvi, thanks so much for the $2 donation, man. Says, is it too late to enter into a BTC short? So, okay, hold on to that question, and we're going to get into the technical analysis thing, man. Mr. Etherman, hey, what's going on, my good dude? And by the way, guys, thank you so much for the wonderful comments, man. I appreciate the support. I appreciate all the great comments that we get, man. I mean, this stuff, I need to get back and respond to some of these. That's why everyone wears flannel now. I always try to respond to YouTube comments within 48 hours. I try to respond to all Discord messages within 48 hours as well. So thank you guys so much. Just growing and continue to grow and build. And again, I mean, we've been doing this. We've been doing the daily live streams for about 4 months now. And I mean, I can't believe that we've gotten the I can't believe that we've gotten the responses that we've got in the community that we've built. I mean, we've been doing the premium trading group for the last 2 years, but we weren't really looking to, to do the shows or anything. We were just kind of doing, old market updates. You go back and watch my old videos there. Some of them are a little cringy because I'm getting better and better and better at this stuff, but just kind of performing and doing the show and everything. But anyways, all right, guys, let's break into it, man. Thanks, Minister. I appreciate that, bro. All right, so let's get into the main charting, guys. Let's break down the markets, guys. So Zuhair Nakvi, I hopefully this will hopefully be helpful for you, man. All right, so when we're looking at Tether, guys, I want to take a broad look at the markets. And I saw a question up here. I don't know if Scott's grabbing the questions or not. So let me just scroll up here through the chat because I did see a question from Levon Vartanian. So let me copy and paste that into my doc here. Vlad wants me to look at the MDA. Okay. Are there bits of real Panther in your Cracking Cryptocurrency coffee? Of course, man. Bits of real Panther. Christian Zeladon says, for real, the weather forecasters have been less accurate the last couple of months. Yeah, I don't know if it's global warming or just general insanity or the rise of mob politics. I don't know what it is, man. Bitcoin Boogie, what's going on, man? Hope your day is going well. Justin, would you please look at CPRX daily and give me your thoughts? Yeah, sure, man. If I get a chance, we're going to look at CPRX. Daniel Clerks, what's going on, man? All right, cool. I think that's everything. And Tiger Blood. And Tiger Blood. Okay, so let's go over here to Bitcoin. And I'm going to look at all the data metrics. I'm going to start off doing this as well. We're always going to try and look at the longs to shorts, the bid-ask sum, the MDR. We're going to go over what time transformation and Wada Atar, which is the current indicators that we're highlighting right now, are going to be telling us, as well as our EMAs, our Ichimoku, and our volume profile. So broadly speaking, man, so if we look at this, if we look at our previous swing low right here, coming in around 36.80, I'd say 36.70, depending on if you want to use the closing price or the actual wick down. If we use the actual wick down off the low, that's going to be 36.70. If we use the closing price, we're talking about 37.13. So pretty significant hammer candle at the bottom of a downtrend, generally a good indication the price is going to move up just based off price action analysis, just based off of candlestick charts or candlestick analysis. But anyways, if we look at this as a range, where we have our previous swing low and we have our current swing high, we found support roughly in the mid-range of that, or roughly in the equilibrium zone of that range. We talked about this earlier. We actually talked about the tighter range, talking about this level right here, this being the low, this being the high, and this being the equilibrium zone that we didn't end up breaking down. We also broke the low of that range. I've heard arguments that this is a liquidity grab, that we've had a demand run, right, where we've dropped down and cleared out stops. I don't see that. If that would have been the case, we would have seen the rebound off of this candle right here, or this candle right here. See, either of these candles, see, this candle did put in a little bit of a bullish reaction, right? So you do have this previous level of lows, you go on a nice tear to the upside, you have this steep drop movement down. So anybody that entered potentially on the buy of this candle might be setting their stop loss, I don't know, somewhere down here below these lows. That candle clears those out and you do have a little bit of a rise. But again, was that trade worth it? Because since this candle closed low, I mean, you had less than a 1% trade there. So when we're talking about Bitcoin, I mean, unless you're 25x leveraging, and again, if you're watching the show, you know that we don't really do that here. We're about the long game and long sustainable trading. There are other channels for scalping, and the reason why I get requests a lot, because I know that there's other people making like how to scalp and do this and that and these, how can we take advantage of these things to scalp? And listen, I'm just here to tell you this, right? As somebody who's been able to do this profitably for a long time, in options and equities and Forex and now in cryptocurrency. That stuff is not, that stuff 99% of the time, 99% of the people who go down that route of wanting to take these high risk, high reward, high profitability setups and scalping technology, scalping tools and techniques, they don't make it. They don't make it past the year and they end up blowing out their account because it's not a sustainable practice, right? Because it's going down that route of worshiping at the altar of price action. And as I've talked about before, there's nothing wrong with inserting price action analysis into your strategy, right? But it has to be strategic. It has to be systematic. It has to be if this, then that. You have to be entering a trade the same time every time. Otherwise, you have a 99% chance of eventually blowing out your account. We are here for the long game, guys. We are about sustained growth over the long run. We are about making this a career. We are about being able to trade profitably. We are about trading like professional prop traders trade. We are about trading like how professional hedge funds trade, and not necessarily hedge funds, because they are mostly concerned with building multiple portfolios consisting of 10 to 20 positions, going long and short simultaneously. So we do take a more traditional approach to trading, where we are looking to hedge the USD value of our account, but also put on good risk to reward style trades, where we're generally biased toward one direction. And in general, we're hedged with money management skills insofar as opposed to broadly being hedged with multiple long and short positions. Now, that is an option, that is possible. And that's something that we're going to be talking about. That's actually the next module of the webinar series that I'm going to be producing. So again, I want to thank the premium members for your patience. Doing the move and everything was, I had a lot to do. Pretty much that's all done. So now the only thing that I've got left to do is to go down and get this computer. But I do have the next money management module, which is going to be the next module for the premium webinars. And just to give you guys a little bit of a teaser, here are going to be the courses in the module. I'm almost done with, I'd say, about 3 of them. So after they go to final edit and I get them all, kind of spruced up so they look good, those will be available. But we're going to be covering topics such as the average true range stop and target system. We're going to be talking about using the average true range as a risk detector, so as a measure of volatility in different markets. So if you're not using, for example, the Kraken cryptocurrency money management strategy, or how much to invest in a trade, which we guys talk about pretty much every day. It's in every post that I make. We're going to talk about hedging, or locking in the basis notional. So this is going to be traditional hedging. So shorting a contract and purchasing the underlying asset for a period of time to lock in the notional basis rate. We're going to talk about hedging against naked shorting. We're going to talk about scaling out of a position, scaling into a position with real world examples, how to actually do this in BitMEX or the platform of your choice. We're going to talk about realistic growth expectations, right? So how much on average can we actually expect our account to grow over the course of a year? We're going to talk about hedging using different contracts. This is going to be a BitMEX specific strategy video. We're going to talk about hedging using different accounts. This is going to be, again, another BitMEX specific video. And then how to manage underwater positions. Now, that's a little bit of a misnomer, because that is a request from a premium subscriber, how to manage underwater positions. And I don't think that the answer is going to be exactly what they're looking for, but this is going to be probably one of the most mission critical videos. Yeah, and then just by popular request, I'm developing another module, because again, after the money management module is going to come the trader psychology and discipline module, and then we're going to get back into kind of what we've already broadly exposed people to that have access to the premium webinars, which is the introduction to technical analysis and how to utilize the Kraken cryptocurrency strategies and tools to make money, and not your traditional indicators or strategies. So anyways, guys, so shout out to you guys. Thank you guys so much for your patience. It's going to be well worth it. That stuff's going to be out, and I'm pretty pleased with what we've got written up so far. Levon Vartanio says, thanks, man. I'm glad to have found the show. I've been watching and learning. Going to join the club when I get some more time. Hey, man, we'd be happy to have you, man. Less than 4 months for having bull run is so near. Hell yeah, fundamentals. Christian Zeldon said, yep, exchanges win with leverage and margin trading for sure, and they do liquidations by wicking. I wouldn't want to play the game. Yeah, you have to realize that that exchanges are incentivized by frequent turnover and frequent trading, because you have to understand that exchanges are getting you. They're getting you with BitMEX specifically. BitMEX is getting you with a financing turn. They're getting you with fees. They're getting you with liquidations, which is because they have that ADL system. So that's one of the more unique proprietary ways that BitMEX is able to take money from you. You have to remember that BitMEX is not there to make you money. BitMEX exists for the sole purpose of taking money away from you. All exchanges do not exist to make anybody money. Exchanges have business interests. They have a conflict of interest from you as a retail trader. And that conflict of interest is that they are designed, their business model is generated upon taking money from you to give money to them. Yeah, that's just the reality of the situation. And this is why most retail traders lose money, because the entire industry is stacked against you, especially if you enter with traditional education, because traditional education is going to say, hey, throw these trend lines on a chart. Throw these crappy indicators on a chart that are, just suck ass indicators that have been used since the 1960s. Buy when this happens, trade as frequently as possible, trade as often as possible, take as much risk as possible, use as much leverage as possible, because you got to get rich quick, man. Come on, you can make $1 million. You got to go be able to get that Lamborghini in 6 months, man. What they don't tell you is what I try to teach people. BTC Technical Yadav, thanks so much for the sub on YouTube, man. What they don't teach you is what I try to teach individuals in the stream, and what I've tried to make my life's work and passion on trading people in the premium trading group as well, which is approaching this from the eyes of a professional trader, approaching this with the strategies and techniques of a professional prop firm or a hedge firm or a hedge fund. So taking those risk management and money management skills into account, taking mature, disciplined psychology into account, and managing our entries and exits appropriately. But again, that money management and psychology is key and primary and fundamental before you really have to worry about. No, that's not true. Let me. Hopefully you guys understand that. Money management and risk management are the most critical things to a trader. I've never met a successful trader who does not have those things locked down and on point. And that's, kind of the thing. Again, I don't know, for the guys in the group, you guys know what we're talking about. So anyways, let's get back into this. So we found a little bit of support, and again, I'm going to call this, as you guys know, baby bitch support. at the mid-range. We haven't cleared out any significant lows, in my opinion. I don't see any, and we're just doing price action analysis here, so we'll get in here to some more specifics here in a bit. I don't see anything in here that is fundamentally bullish. These wicks to the downside, we've seen baby bitch follow through. Again, as I said yesterday, I would not be surprised, and again, we're kind of broadly seeing it right now. Just a little bit of lazily listing upwards in price on low volume and low momentum. Just as a natural reactionary or natural reaction to that high volatility movement to the downside, guys. So yeah, we're finding a little bit of support, which I think is very weak, very tenuous, that I do not think is going to hold between this previous swing low and our current swing high. So broadly speaking, I do expect a little bit of sideways consolidation. As I said, listing lazily upwards to punish late-term shorters. So to punish anybody that attempted to short the bottom of the range, which you never do. You never enter generally on high momentum and high volatility. You never try to short a move it generally after it's done. Just like we saw, so just broadly speaking here. So I expect to see probably this formation like this form after this, right? So we have a high momentum, high volatility movement to the downside. We get a little bit of lazy listing to the upside where people think, oh, this is a buy the dip opportunity before we eventually get continuation to the downside, because this is the beginning of a downtrend. This is not continuation of an uptrend. And I think we're likely to see the same kind of lazy, 2 steps forward, 1 step back, 2 steps forward, 1 step back kind of behavior and pattern here from Bitcoin as we move forward over the next month or so. So again, let's look at the 15-minute chart for those who kind of have an issue with this. Let's look at the 15-minute chart, all right? This to me, again, let's zoom out here a little bit. So look at the difference on a lower time frame between. So we got to go back here a little bit farther. Okay. Look at the difference on the 15-minute chart between a genuine uptrend, right? We can go over here and see the second leg of a genuine uptrend, right? Look at that. Just look at the behavior of price, right? Look at price slowly, lazily making lower highs with few exceptions after grabbing for liquidity, continuing to lazily list upwards, making lower highs until we actually see significant market changing movements right here, which is really where the beginning of our, this was the indication right here when we actually saw this large drop down from our previous high, from our current range high. This was the beginning. That high momentum, high volatility movement to the downside is letting you know that the trend is about to change or likely to change. Because remember, it takes significant volume or a change in sentiment to reverse a dominant trend. We were in a dominant trend to the upside. We approached resistance. We had a very significant movement to the downside on high momentum and high volatility. That is, for anybody paying attention, that is the market screaming at you, hey, Zero Cool 721. Hey, good to see you on Twitch, man. Third Eye Trader, good to see you on Twitch as well. Sorry if I missed you guys. That is, for anybody paying attention, that is the market yelling at you that, hey, this is potentially the beginning of a new trend. Then we see price broadly. Then we see price lazily list back upwards, roughly towards that same point to really punish anybody that entered into the bottom and to really trap traders back into the long side before continuing on with that high momentum and high volatility movement to the downside. Let's go look at the 8-hour chart. I want to go look at the 8-hour chart here. And I want to point out this. You just have to ask yourself, okay, where are the high currently? Because I think this is the really beginning of the downtrend right here. Where are the high momentum and high volatility movements generating from? On what side of the market are they? Are they filling bearish orders or are they filling bullish orders? Are they aggressive? Is it aggressive market selling or is it aggressive market buying? And as you can see, this is really the determining factor for me, because you don't really see anything like this bullish until back here really at the beginning of the uptrend. And again, we create this inefficiency in the market here, which I think is probably where we go back to retest, because that's just how life works. Clear liquidity below here, potentially below here. Again, we'll figure that out once we get there and we start seeing bullish signs of a turnaround or seeing consolidation at those lower price levels. But again, I wouldn't want to be a lot of people, the questions that I'm getting lately are like, okay, Justin, so you think price is going down. So where do you want to be a buyer? Well, again, broadly speaking, I become interested in potentially being a buyer around 3650. Okay, around 3650 to 3500. But that doesn't mean that I have buy orders set. I'm not interested in being a passive buyer whatsoever. I would much rather be an aggressive buyer once I see price consolidate. Because again, once price gets done making fairly significant moves, we have these really choppy periods where anybody attempting to enter into one side of the market or the other is generally getting kicked out on long wicks and high volatility, especially trading on the platform that we all know, love, breathe, cherish, BitMEX. Foul mistress that she can be sometimes. So it's just better to be a reactionary trader, in my humble opinion. Not always. I mean, there is good benefit to predicting the market when those current things happen. That's what we did back at 41.14. Everybody was screaming long. We went short at 41.14. And we were able to profit off that position quite significantly. But now that we're done making the big move and we're waiting for just the general continuation of the trend, we're being reactionary. We're being patient. I mean, we're already short. We're short on Bitcoin from 40.15. There's no need to make drastic or significant changes or movements right here. And again, that was a reactionary movement. But we can see here that after that, this is where the strength shows itself in the market. We see this large movement down on high momentum and high volatility, right? Really signaling that the trend is shifting to the downside. We have this lazy listing upwards to really punish anybody that shorted the bottom of the market and to trap longs. And then I think here with this candle, we really do begin to see the signs of the new dominant trend, which is to the downside. So no, I don't see this as a buy the dip opportunity. I would really need to see some significant signs of bullish momentum and volatility just looking at price action here before I'm even interested in longing anything in this range. I think that this is the beginning of this was the beginning of the downtrend, and this is the continuation of that downtrend after we've trapped a lot of retail longs up in this area. So we have a lot of rocket fuel to the downside. Because again, we didn't see significant turnover at these high rates. So there's still a lot of trapped longs. If we go look at TensorChart stats, we can actually see, a lot of people are fascinated by open interest, which is a good metric. But another metric that you should really be interested in is turnover. Turnover is going to be indicating to you, okay, actually how many people were exiting their positions or how many people were flipping from long to short, for example. The nerd Robert says, I can't predict the future. I describe myself as a true hodler. Wayne Tech says, Justin, when you first took profit from your short position, what percentage of your position did you close out? 50%. 50%. I always close out 50% of my position at 1 ATR. Third Eye Trader, what's going on, man? Third Eye Trader says the red candle means what on that chart? So that is time transformation, and that is unoptimized to these charts. That is a sell signal, or you can look at it broadly as a take profit signal if you are in a long position. What's the name of the indicator? Turner. Time transformation. Cigar. Zahir Nakvi, thanks so much for the $2 again, my good friend. Can you look at the 377 and the 886 on the 3 hour? I have a theory. Yeah, sure, man. What is the indicator name that shows turning longs to shorts? There's no indicator. You're going to have to go over to tensorcharts.com, create an account, and look at BitMEX stats. So tensorcharts.com/u/BitMEX stats, and you can see turnover right here. On the 3 hour. Okay, so we'll look at I think I have those right here. This is the 377, yep. And the 886 right here. Yeah, so this actually, I didn't get a chance to comment on this earlier, but These are pretty good. I got these from Anti-Pattern in the Discord. He wanted to point out these Fibonacci EMAs on the 3-hour chart for Bitcoin, which is going to be the 886 and the 377, the exponential moving averages. So the 886 and the 377 exponential moving averages. And I took a look around these, and these are corresponding to price movements very, very, very well. Very well. I mean, they were calling resistance up here in the previous bear trend. Obviously, you have a little bit of a fake out here. You have a tiny little fake breakout here. Time transformation caught that reversal, though, quite nicely at that point in time, and telling you to take profit on the way down. And then price was obviously just in a free fall, as we all know, from the drop from 6,000. It was just, never ending bearishness until price comes up and touches the vicinity. Now, I mean, here's the only comment that I have upon this is that you're going to be able to find things that work very well on any time frame that are going to serve as broad references for price. The thing that interests me is that if you are using this was good. This was very, very good. The thing that interests me is that you want to make sure that you're understanding the difference between analysis and trading. So we can talk about analysis and what price is likely to do all day long. But you enter into a different realm once you're talking about extracting profitable money. Okay, good. All right, Zuhair. So that's good. That's good to know. So this becomes a different scenario when we're talking about how to extract profit from the market, right? So this has been a fantastic. Hold on a second. Okay. So we didn't have because I have to be honest. What are the odds? Okay, so let's look at this objectively. All right, let's go back in time a little bit. Okay, let's go back to this area of the market cycle. So let's go back here. So this would be Bitcoin from March 2018 to November of 2018. Okay. So let's look at this objectively. So this is the 3-hour chart, and this is the 377 and the 886 Fibonacci exponential moving averages. Does this look like price is respecting these levels fairly well? I mean, you can find examples here where they are, right? So, here, for example, you can see a little bit of resistance here, and then it's broken through. Respects it briefly and then breaks through, disrespects, kind of consolidates around, breaks through, completely disrespects, pulls back and acts as resistance. And then we enter into a free fall, comes up, finds resistance very, very briefly, shoots through, finds resistance briefly, shoots up, finds, consolidation, consolidates, breaks down, doesn't really come back up to test. Comes up, shoots through, pulls back for support. So the point that I'm trying to talk out, the point that I'm trying to observe here is that if you're using these like for trading discipline, so what's your entry signal? All right, if we're using these for trading and not for analysis, right? So what we're going to go long, for example, if price crosses above our slower EMA. So we would have been going along on this candle and we're looking to take profit at resistance. Okay, that would have given you 8% profit there. And then what we're looking to go long again, potentially if price goes above here. So you would have entered here. Maybe you catch that 6% profit, but likely that would have probably been a loss. Are we using this as a proxy for going short? Are we going long off the retest? Potentially you would have made some money off of that, but that most likely was a loss. The problem that these are fantastic for analysis. And again, this is why, broadly speaking, I try to differentiate the difference between analysis. And I think this is really cool, man, especially when we zoom forward in the future. But just broadly looking at this, unless I'm missing something, it doesn't seem like I get the best tradable signals like this, or at least it doesn't seem like anybody religiously trading this on a systematic strategy of if this then that, I don't see how they would have outperformed the market by using a separate set of strategies. And my point is, I see a lot of opportunities here where you likely would have gotten burned. Trying to trade this as resistance. And the other thing too is on the 3-hour chart, I mean, you're going to have to be glued to your screen because you have very brief spurts where you're finding resistance and then it immediately breaks through on high momentum. So if you're looking to, depending on how you're looking to trade this, it's kind of one of the downfalls of trading EMAs. But so looking at this, which is the most relevant period of history, I'm saying that you likely got burned or got lackluster results trying to trade this, right? Because you would have missed probably all of this or this. So let's say you're using, I mean, the most simple thing is, you're buying when price crosses above this moving average and selling when price crosses below that. I mean, those are obviously mostly all losses right there. So, you're entering here and you're selling here and you're entering here and you're selling here. I mean, yeah, all those got you completely wrecked. And there's no crossovers to speak of. So again, there's definitely something to be seen here as far as strategy for trading. If we took the time and the grind, we could probably devise something here that's probably pretty good. But broadly speaking, I try to be realistic with what I'm talking about. So my point is, by the time we saw this, or by the time we realized from following the strategy, maybe from March to November, and we just realized that, man, we could have come up with something like way better than this, right? Because again, it's not what we're seeing now with price is not what we're seeing here. We see potentially a tradable strategy here because we're finding support and resistance, but in no way, shape, or form are these EMAs calling the tops or bottoms of markets. In fact, broadly speaking, on higher time frames, they're not even giving a shit. They're just kind of mostly blasting through these EMAs, with little to no disregard. Finding brief little consolidation support upon them, which makes it a possible strategy to trade. But again, you never know. Like look at this one. Are you going to go short off the retest of it? You get wrecked. Are you going to go long off the retest of it? Potentially you would have made some money. Most likely would have been a loss. So, I mean, there's something here. You can always put in the time and the grind to find something. But in general, this does look like a lackluster strategy. So from the time period of March 2018 to November 2018, this wouldn't have served you very well, nor for analytical purposes did it really call top markets. So now let's zoom forward to what's going on now. And we see it beautifully calling pretty much tops and bottoms of markets now, right? But it's my experience that once we find something like this, once you actually, because you wouldn't have been following this, my point is that likely you would not have carried this strategy that did not serve you so well. You would have taken these off your chart a long time ago. So now we zoom forward into the future. So we would have taken those off of our chart a long time ago for the purposes of trading because they just didn't serve us very well for a 6-month period of time. So by the time, what would have been our impetus to put them back on our chart? Maybe we put them back on for fun. And now we see oh shit, price seems to be respecting these levels in a different way. So before it was respecting them as potentially a tradable strategy, but not really calling tops and bottoms of markets. Now we zoom forward and we see that on, I don't know if you want to call that one, but okay, let's call it 1, 2, 3, 4, 5, 6, 7, 8, maybe 9. On 9, but again, I'm being very generous there. But on 9 separate occasions, this thing pretty accurately called, tops and bottoms. But at what point will we have thrown this back on our chart? At what point would we have been able to notice this pattern? Because again, another thing that you will find out is that often by the time you're able to spot a noticeable pattern, market movers and institutional traders are spotting that same pattern as well. And by the time retail traders spot that pattern, institutional traders have spotted it months in advance and have predicted this. And if everybody is going to if this becomes a popular pattern and lots of people take the same side of a trade, the market's going to move in the opposite direction. That's just in general how things work. So I'm actually from an analytical purpose, I'm actually pretty interested in this because I think this is a great find, bro. But I just want to make sure that I frame that correctly from the point of, okay, are we using this to trade? Are we just talking about this from an analytical purpose, or are we trying to use this as a trading tool? And as we can see, if we go back and look from March to November, wasn't the best trading tool. So we likely would have taken that off our chart. And this is kind of like my thing with stochastic, right? like stochastic and RSI and Bollinger Bands and crap like that. You're going to get these cherry picked charts where, trading educators are going to be like, hey, look at this. I mean, it's so simple. Look at how beautifully it called this bottom and then it called this top. But the point is, if you're putting an indicator on your chart where you're not going to feel comfortable taking every signal it gives you, why is that indicator on your chart? So if you see something, or if you see a period in time where for 6 months, right, where an indicator just chewed you up, most likely, you have to realize that that one time that it did give you a beautiful trade, I mean, what's the odds that you took that trade, right? If you've got the RSI or the stochastic on your chart, and you're entering long every time the stochastic crosses up, and you're entering short every time the stochastic crosses down, for example, and whatever, you can set multiple rules. You can say it has to be here. You can set all kinds of rules for oscillators, right? Those are all coded directly in a time transformation, for example, which is different because it's a centered oscillator. But I digress. But when you see an indicator give you like 8 terrible trades, and then the 9th trade is just a gangbuster, the reality is you likely didn't take that. I mean, because why would you stay in something? Why would you stay in something that gave you 8 terrible signals? Why would you lost faith in that thing a long time ago? So yeah. So having framed that, don't think that I'm trying to pop the air out of your bubble or anything. I think this is actually a pretty good find, bro. But now, if you let me go to the Discord potentially. Yeah, we talked about this a little bit, anti. So if you've got okay, right. So I think yeah. So I think broadly, your hypothesis was that the 337 was calling the tops perfectly, and now it's calling the bottoms perfectly, and this is calling the tops perfectly. So from an analytical standpoint, I'd say that once we break through this level of resistance, so the 886 Fibonacci exponential moving average here, I think that's going to be congruent with. So now let's. Yeah, I think that's going to be congruent with us breaking significant higher time frame resistance, which has pretty much been my necessity for entering into a bullish case pretty much all year long. Now, what I want to do is I want to note where that EMA is, which is 4074. So we're gonna draw a line on the chart of 4074. That's our 886, and our other one's coming in around 3866. 3866. Okay, and now we'll take those off the chart, and we're gonna go back to my time frame. Okay, and let's throw CCEMA on. Okay, so nothing on the 8 hour. 12 hour. Well, it is the 100. It is the 100 on the, it's the 100 exponential on the 12-hour chart. And let's go to the 24-hour chart. And let's spice this up a little bit. So, nope. It's the daily 55 exponential moving average is that same one calling bottoms. Hasn't been doing as well of a job, obviously, as calling the bottoms as that. That's kind of more been the case in the last 2 examples of the 200. Let's go to the weekly. Oh, we're going to have to go to Bitstamp. There we go. So Bitstamp, I would say, let's open up this. Where were those levels that we drew? Oh, shoot. I believe they were. Going senile. 4074 and 3866. Yeah, old school around here. Okay. All right, so we've got our fastest EMA acting at 39.50 on the weekly time frame. We've got our 200 simple moving average at 34.54. We've got our 21 exponential moving average at 43.37. So yeah, not a lot of confluence that I'm finding. Again, you know, and this is what I'm trying to demonstrate here broadly is kind of the hunt for Red October, if you would. The hunt for Red October, because you can find confluence on lots of different time frames looking at lots of different metrics. Like, for example, I wouldn't be surprised if we could find a different simple moving average or exponential moving average that would broadly potentially mirror, in at least in the short, like we could find something that called the tops and the bottoms better back in this period, and that is calling the tops and the bottoms better in this period. And then we could find something that sucked at calling the bottoms and the tops in this period, and something that did very well at calling the bottoms and the tops in this period. Like, for example, I think that, boom. You know, look at the 200 simple and the 200 exponential, you know. That's been calling the tops and the bottoms of this current range beautifully well. But obviously didn't have anything to do with back here in price over here. Mr. Ether says you could be wrong 80% of the time and still be a profitable trader with correct risk management. So actually that indicator is fine to use, correct? Yeah, yes, that is correct, Mr. Ether. Ryan Atkinson would like us to take a look at Zen. All right. So here we are an hour into the show. We haven't looked at a whole lot. But no, this is good, man. This is good. And don't think, hey, Zuhair, don't think that I'm trying to diss your indicator or anything like that. In fact, I think it's actually a pretty neat what we found. And it actually, I don't know if you've noticed, you'd have to kind of watch closely, but I actually have had those on my chart the last few days because I've kind of been clicking in and off and looking at them and keeping my eye on them, because I do think you are definitely onto something. Go over here. I think I might have to turn that restream bot off because it makes it difficult for me to read what's going on in Twitch chat. Let's see here. Zero Cool says the 8-hour time transformation on BTC is showing a buy signal at support from mid-February. You don't see it as a bullish retest. Mid-February. Yeah, I don't know what settings you got. Nope. 8-hour TT on BTC. Oh, maybe we're looking at different charts, man. You don't see it as a bullish retest with a daily close above. I'm not sure. Zero, can you be a little bit more specific, man? The Davis COSP short in EOS H19. Yes. No, I actually don't have a position in EOS. I probably should. But next 21st of February daily candle. So this bad boy right here. So the last buy signal that I see was the 29th of January, and we do see one here as well. New York Life 1845. Thanks so much for the follow on Twitch, my good man. Mr. Ether says, I just wanted to feel smart for a minute. You are smart, man. Love the streams, Justin. Hit the like button, guys. Don't forget to leave a comment. Thank you so much, man. I appreciate it, bro. Math tutor, CC EMA. No, CC EMA is free to use, guys. Just go to darn it. Is it tradingview.crackencryptocurrency.com? I think it's tv.crackencryptocurrency.com. And you guys can check out my script. CC EMA is free to use, man. Robert, thanks so much for the $5 donation, man. Wants me to take a look at Stellar Lumens. Do that. But it is 1:05, guys. I need to go grab some coffee. The 21st of February, daily. Because you referenced zero, because you referenced the 8 hour and then you said something about the daily. And the 21st, I don't see a buy signal from TT. I remember the long I remember that momentum long we took. Yeah, I see what you're saying, man. I see that. Listen, I get the cases for the bullish bias, man. Just not buying it, dude. I'm just not at this point in time. And that's not to shoot down what you're saying. It's just yeah, I get what you're saying, man. I get the retest of 3,900. I get the bullish impetus to the upside. I get the kind of the same argument of retesting the bottom of the range. I get that. And I just don't buy it, man. I think we're going down. Anyways, guys, let me go grab some coffee. When I get back, I'm gonna go ahead and take requests. And we'll talk about some cool, fun, exciting stuff, guys. Don't go anywhere. While you're waiting, I guess there's no giveaway for you guys to take advantage of. While you're waiting, guys, head over to tv.crackencryptocurrency.com if you guys haven't already, and you can check out our free indicators, our own alert version of Ichimoku and CC EMA. You guys are free to use as well. Robert, when I get back, I'll take a look at that. Woo! XLM for you. Let me go get some coffee, guys. I will be right back. All right, we're back. We're caffeinated. Well, we're in the process of getting recaffeinated. Thanks for hanging in there, guys. That's really good coffee. Okay. What are some stuff I wanted to go over? Zero Cool says, overall, the market doesn't look super strong. 3,500 will be the real test of how strong the broader trend is to see if 4K is ready to break before testing the lows. Yes. Yes, I agree with you. Okay. Sorry, let me get back on track. We've got such great questions, man. Let's go over, let's start going over this. All right, so first thing is, boom. Oh, that happened real quick, guys. Congratulations. Congratulations, guys. Lun for the premium subscribers there. Lun just popped off, so good trade, guys. Good trade there, gentlemen. Called that one right before the beginning of the stream. Kaboom. All right. So XLM. Where you at, bad boy? There you are. XLM. Ooh, XLM putting in some nice bullishness here from the level. So if we return to what we said yesterday, 03/25/2019, close of the 3 a.m. 8-hour candle was the last, was I believe the last time we looked at this. Yes. Very risky long trade on a confirmed time transformation bullish cross. Not interested, looking for higher time frame, weekly or 3-day support here. If 2500, 2535 does not hold, then a retest of 2350 to 2400 is likely. What did we see? We saw bullish reaction off of that level. We do have the confirmed. We didn't have the confirmed 8-hour cross on that candle that individuals were interested on entering on. We will have that confirmed bullish cross at the close of the daily candle today. Let's find that 3-day support here. Yes, actually, the 3-day did open up right off that level. The 3-day is going to close. So today is going to be the 26th. So 2 more days. So 2 more daily candles for this bad boy to open. So 1, 2, actually. 2 more daily closes for this bad boy to close. And again, that would be the longer term. If this level does hold on the 3-day, if this level holds on the weekly, then the weekly candle looking good. But again, the weekly candle, a very, very fresh weekly candle right here. But I would say if the 3-day does hold this level as support, then I would see a natural retest. Let's turn magnet mode off. Then I would see a retest at least of resistance, but I wouldn't see this as a retest of resistance. I would see this as genuine bullishness. After a nice expansion period, rejection from resistance, pull back to about the 50% area of the range, and then continued movement upwards. Overall, the weekly is still bearish. And the weekly will need to close as a bullish candle for us to really be looking at this higher price target of 33.96. But overall, especially on the 8-hour time frame, looking pretty good, man. Looking pretty good. Let's look at, the volume's not overly impressive though, and that's the only thing that I don't like. I do like to see on a nice reversal, I do like to see a very impressive volume candle, because again, remember, it takes significant volume to move the trend. And as we can see here, we are now in a downtrend on the 8-hour time frame for XLM. And you can see the large candles right here. You can see the large volume spikes that actually end up reversing the uptrend. So we were in an uptrend since, broadly speaking, the 7th of March. When we really started closing above resistance. This was the confirming candle closing above resistance right here. Although we did get the bullish cross on this candle right here out of consolidation. Those are good signs to see. We have the Fisher crossing above zero on this candle right here. Did Wada Atar confirm on that candle? That would have been the 8th of March. Let's go back and look at the 8th of March. Yes, Wada Atar would have confirmed the trending trade to the upside on this candle right here. So we'd have potentially taken a long trade off of that using Quadriga to manage our risk. Using price action and volume, this would have been the confirmation. Breaking above resistance, this would have been typically a fake out candle, because again, you're not sure, because you do have that on this candle right here. You did print that initial high volume diamond coming out of resistance, closing above resistance right here, but on a very long wick. But the next candle does confirm the bullishness. Again, you've got Wada Atar, very bullish. You've got time transformation trading above the zero line, and then you put in that unnatural volume as well. Strong indication that you are genuinely breaking out of a downtrend. You take that trade up, you could have taken some nice profits there, or you could have been using price action and reversal, or waiting for the trending indication to be out for either Wada Atar right here on this candle does go below the explosion level. That's one exit indication. And then this candle right here crosses below the zero line. The Fisher crossed below the zero line on this candle right here. Another indication to be out. So from here to here, pretty good trade. How much was that? About a 9% trade, so not too bad. And we can just see, look at the volume spike. So look at the volume spike that right here. So this unnatural volume here, and then this unnatural volume here, which was a local top. You had a pretty drastic pullback after that, but then continuation of the trend. And then we see this candle right here, which really signified almost the top of the up movement. You move into a period of consolidation and you have your last up thrust. These are always the things that scare me. So after you have a nice uptrend for a while, then you enter into a period of consolidation. Most people see, whenever I see, this is another thing, it's not always indicative, but when you see a cup pattern like this, but it's happening at the top of an uptrend near resistance and you blast up, I mean, you put in that same swing failure pattern, not quite a swing failure pattern, even though you do close lower, depending on if you're using highs or closes for your swing failure pattern, but whatever. But anyways, you put in that supply grab, you put in that liquidity grab to the upside because you post a higher high, but you're not really able to close higher than that previous high, and then you have pretty much immediate rejection to the downside. So strong uptrend, and you see high volume candles actually end up reversing that uptrend. Now you're in a downtrend and you kind of need the same thing. You want to see high volume reverse the downtrend. So even though this does look attractive and we did have a nice bullish reaction off of support here, the same support level that I plotted out, and you've got about a 3% profit on the table if you would have entered here, but it's difficult to discern where or how you would have entered. Trading time transformation, this would be your entry signal right now. So on the close of this candle, where would we be managing risk if you were entering long? 24.75 would be your stop loss, and you'd be looking at 26.51 to begin scaling profits out and reduce risk. And you've obviously got higher profit targets of 27.22 or 27.92, depending on how you'd like to manage this trade. But I don't see the high volume that I want to see. I don't think this has immediate follow through. I wouldn't expect this to have immediate follow through. I would expect to see consolidation and then a high volume breakout of that consolidation, similar to what we saw right here, as we just explained, similar to what we saw right here before we actually get significant trend reversal. Now, again, that would just be my expectation of this. So again, we're talking about the difference between analysis and trading. So I'm still pretty wary of this just off the bat because I don't see that high volume spike that would make me want to enter. Overall, this is still pretty weak volume. I mean, we're not even trading above the volume moving average calculated over the last 15 days, excuse me. So I would be hesitant rushing into this. The weekly and the 3-day are starting to look good, but we do want to be a little bit hesitant about this, especially with the entire market seeming a little weak, especially looking over to our majors, Bitcoin and Ethereum. Altcoins continuing to pump, I guess I would say, but very spotty. And overall, I see capital flowing back into stable coins, and I see most of the MDRs turning bearish on most of our coins that have pumped. I think we're entering into the low sat period of time. So low sats should be where the market cap is flowing into right now. So coins like LUN, coins like HOT, in general, weaker performers that haven't had capital flown into them yet. That's the natural progression of the market cycle for cryptocurrency before crypto takes a leg down. So if you guys aren't familiar with that, basically the majors pump, so Bitcoin and Ethereum pump fairly significantly for a sustained period of time, generally from 2 to 3 weeks. They go sideways. You have your majors pump, your medium caps pump, you have your low caps pump, while all the rest kind of drift down lazily toward the left. And once the capital flow really completes itself, price moves back, or capital flows back into stable coins, and then the market takes a significant correction. But just from a technical standpoint, I think if the 3-day can hold this level, then we can possibly look at a retest of resistance, or maybe even higher targets if that resistance is broken. So again, I'd want to take a look at this again when the daily candle closes, but I'm really hesitant on entering in just off this signal right here, just based on the fact that yes, we get the bullish cross on time transformation in oversold conditions. So again, if you are trading this strategy, then over time it's going to be more profitable than not. But if we put nuance onto it, we don't see the volume that I think is going to be necessary to reverse price action. Let's go take a look at the MDR for XLM. The nearest 5% of price. Now, nearest 5% of price for XLM is pretty bullish. So that would kind of confirm, again, what I'm saying. I wouldn't expect this to see immediate follow through. I'd actually expect this to get sold into a little bit. And again, I want to see this price level hold as support and see a little bit of sustained consolidation in this range. The most bullish thing is if we pull back and actually hold the top of this area as support. That would be fantastic. And then if the 3-day does close nicely and hold this level as support, putting in a nice little bit of a hammer candle, and then the weekly still looks like a hammer candle, then I think we could probably go ahead and go. Then I'll feel more confident taking the trade. But overall, just currently right now, I'm kind of hesitant on entering into longer term positions on XLM, which is basically what we're looking at right now. We're looking at entering into a larger term position on XLM. So we'll see if this support does end up holding on the 3-day closing basis. Otherwise, I think that the original analysis holds, that we will likely see that retest of 2450, 2350, or 2350 to 2400. So we'll wait and see. Initial good reaction, not something that I would want to enter to off of that, especially without the volume to characterize a reversal in trend. So just be careful, man, if you're in the trade. If you're in the trade, make sure to manage your risk appropriately. Make sure to at some point have a level on the chart where you are going to scale out profit. And make sure to adjust your stop accordingly. But nothing that I would really want to jump into at this point in time. Every time I hear that BitMEX sound, I get scared because I have some asks far away. Jefferson Airplane, great song, by the way. No, I mean, it's just, so, okay, yeah, so to discern, yeah, we see a high that goes above a previous high, but the body doesn't close above the previous high close. So that's one indication right there. And then the fact that it doesn't have any follow through on the next candle. If this was genuine uptrend continuation, you would typically have you would typically have fairly quick continuation, especially after a period of consolidation like this. But really all you see right here is late stage buying, really enthusiastic buying. And you've already had an uptrend, but you can just see, I mean, it didn't take you very long to see that, oh, this has failed. I mean, right down here, you're not seeing a pullback. You already saw the pullback right here. You already saw pullback and sustained consolidation. You saw consolidation from the 14th of March to the 18th of March. You saw 4 days of consolidation, and then a late stage buying pump right here, which got sold into immediately and began the beginning of a downtrend right here, or at least a short-term downtrend lasting from the 18th of March to the 26th of March. So a week plus now of downtrend. And if we think that price is likely to reverse off one bullish candle with no volume to really promote the fact that there's a lot of buying occurring, I would be hesitant. Now, what I'm saying is, I'm not saying this cannot be bullish. What I'm saying is I wouldn't want to enter here. I would like to see a pullback in the support level hold and something like the 3-day, as I talked about yesterday. I'd like to see the 3-day. Wait for the drawings to catch up. There we go. Living in bizarro world around here. And I'd like to see the 3-day significantly hold this level as support. But if you want to be more aggressive and you want to trade directly off the time transformation indicator, it is on average a profitable strategy. As long as you are managing your risk appropriately and scaling out profits as you should. So as I said, stop loss currently around 24. Well, now it's recalculated a little bit, 24.86. So right around here, right around your low is where you'd be managing risk. And I think you'd be looking to take profits at 26.62 is where you want to reduce a little bit of risk, 27.32 and 28.02. But just be careful, guys. Just be cautious. All right. Knock XLM out. People have asked us to look at Zen. This doesn't look too bad. Doesn't look too bad. Mm-hmm. Yeah, you've got a nice shallow area of the volume profile right here, and you don't really have significant resistance until your previous breakdown order block right here, your bearish order block or your breakdown zone. So where does that really start? I'd say you could be conservative. Starting right here is where you'd want to begin. Why aren't you letting me draw? Draw. There we go. There we go. Okay, so let me noodle this out. So that would just be my first area of significant resistance on entering into this shallow area of the low volume node. So there's a couple things here based off price action that make me kind of like this chart. And let's noodle those out together, guys. So the first thing I see is obviously price was in consolidation at this phase right here of the market, and then it ended up breaking down again, and then kind of putting in a market bottom right here. We can see the volume kind of pick up an accumulation right here. So you could say something like an automatic rally, and then something like a spring, whatever. But anyways, you have a point of control in the market right here. The point of control was actually acting as support and resistance. You can see the support, you can see the SR flip right here, flip, acting as resistance, and then broken above right here. See how we break above the point of control on this candle, on this weekly candle, on very high volume and high momentum. Actually, the weekly fissure crossed above the zero line on this candle right here, but you'd be very speculative entering into a longer term trade based off that candle. But you do have the confirmation on this candle. Now, here's the thing. We wick into the low volume node, right? Which often, if you're going to see a reversal, if you're going to see a stop loss hunt, a grab for liquidity, your wick is going to go into the low volume node, because the low volume node is going to be above typically resistance. Your low volume node is typically going to be below support in consolidation phases before you enter into a gap, a shallow area of the low volume node where price just likes to move through like a hot knife through butter. But typically when we see a stop loss hunt, you're going to get almost immediate rejection and follow through. And I would have expected, had this been a liquidity grab that had legitimate bearishness to it, we would have had continuation and a retest of the point of control, so a retest of the breakout zone before continuation. But we don't see that. In fact, we see consolidation at resistance. So at the upper area of the area of the high volume node, the current accumulation or consolidation high volume node. So I like that. Again, I've talked about that before. Touching resistance and then consolidating right underneath resistance on low momentum is typically a bullish sign. Whenever you approach resistance on high momentum and high volatility, often a good sign of reversal. But when you tap resistance and you don't have follow through to the downside, in fact, you consolidate directly underneath resistance, that is typically based on price action, a bullish sign. Now, there are a few things that do worry me about this. Obviously, we do have to point them out. We're getting that first purple dot of death on the weekly time transformation, which makes sense. Just after the market, again, the market's fairly immature here. I mean, the price data only goes back to the 21st of May, 2018, looking here at Zen on Binance. But, so we do have to take that into account with how this has been correlated. But anyways, let's go down to, but looking at price action, and again, we want to have a nice marriage of strategy and price action, or excuse me, of indicators and price action. But looking at the weekly here with the analysis, it doesn't look too bad. I have charted out this area where I would be looking to take profits, and then we have to reevaluate as price would likely consolidate inside this bearish order block between 0002, I'd just say broadly, 0002 to 000208 would be good areas to be taking initial profits. So where is that putting us to? That is pointing us up around about a 20% trade. Around a 20% trade. And where would we ideally be managing risk? Probably not on the weekly time frame at this point in time. But yeah, because this would have us managing risk significantly lower. Yeah, about 30% below us, and taking initial profits on the weekly time frame at 000203. That's when we would start. Yeah, so about 15%, and then 2394, 275. Yeah, that's setting us up for like a 40 and a 60% trade on Zen. So basically something like a retest of the top of the value area. That's interesting as well. Breaking the 21 weekly exponential moving average and holding it currently as weekly support. And testing Ichimoku Tenkan resistance, which we don't have enough data for more. We don't have enough data for our Kijun or our Kumo Clad. Let's go down to the 3-day. Go down to our 3-day and see what we see. Yeah, we see that same level of consolidation right at a previous high without immediate follow through to the downside. In fact, even after the stop loss hunt on the 3-day, we didn't see rejection to the downside. We saw on closing basis, we saw price continue to rise above it. Pretty good sign. Pretty good sign. Now, the 3-day time transformation here is going a little crazy, so telling us to be cautious. But if something's trending strongly, we have to look at those as take profit levels and not reversal indications. So, Wada Atar telling you you're very nice and beautifully bullish. Wada Atar would have had you long from right here on this candle. And you did put in that regular bullish divergence on the previous candle. So, using these two in conjunction, you would have had a very beautiful trade. Wada Atar still telling you to be in the uptrend. And time transformation serving you well here by letting you take profits at reasonable levels. So, you would have taken some nice profit here. Taken some 12% profit, actually 13% profit here. And you would have taken about 34% profit there, talking about P&L. All right. 3-day exponential moving average, 55 exponential moving average current resistance, as well as our 8 acting as support. I'd like to see, obviously, I always like to see the 21 and the 55 are always the most indicative for me when I'm talking about exponential moving averages, especially on higher time frames. So I definitely like to see if this is going to continue on bullishly. I'd like to see the 21 hold as well as a retest. That would be congruent with a retest of this previous level of support and kind of the inefficiency breakout zone right there. But that's not really an inefficiency in the market because on the higher time frames, again, that's just a continuation of the uptrend. Not really irrational. Daily time frame. Yeah, that same consolidation at a higher level, getting rejection from the daily 55 exponential moving average and support on the 21 as well. Lots of bullish crossovers occurring as well. Look at the daily Ishimoku. Daily Ishimoku, we are in the cloud, which actually, if you look at that, the profit target that I set for us would be a beautiful edge-to-edge trade. The future cloud is bullish as well. And we are trading above the Tenkan-san and the Kijun-san with a bullish TK cross right here. Previous level of support would be all the way down here according to Chikuspan. I think that's going to be congruent with that 3-day 21 exponential moving average retest around 1467. All right, so game plan. Looking at the tradable time frame right here, the 8-hour, we're seeing a little bit of nice bullish volume right here. Wada Atar still telling us we're bearish, but we're about to get that price flip. We're about to get that flip in bearish to bullish momentum. 8-hour time transformation consolidating and putting in a little bit of a, it's funny to see when time transformation puts in a bull flag pattern. But anyways, giving you the crossover above the 0 line. So just coiling right there around the 0 line. This is one of those aspects of time transformation, or one of those scenarios in time transformation where, again, I do like to be cautious. Because you want to say this broadly looks like a continuation cross because you could make the argument that we crossed above the 0 line, we pulled back a little bit, and now we're crossing back above the 0 line. But when you take that in conjunction with this pretty steep downtrend right here, we did get a little bit of hidden bullish divergence on this candle right here, which would have led us up for a pretty good trade so far. Entry on this candle, we had about a 6 or 7% profit potential. So holding current Kumo support. Okay, so this is how I would play. This is how I would play Zen. Okay. I need to wait until this current 8-hour and daily candle close, because if I'm going to take a trending trade, which is really the only setup that I currently see. So I see price holding the upper bound of the Kumo cloud on the 8-hour as support. I see price crossing above the zero line on time transformation, but I don't have the indication that I need to take a trending time transformation trade. I need the Wada Atar to be bullish and above the explosion level. So should we close the 8-hour and get that nice momentum, that would be good. Otherwise, I need to wait for the next 8-hour candle, which would be closing around 3 a.m. my time. So that's a trade that I'm going to miss because I'm not up at 3 a.m. typically. Currently managing risk at 158969. So directly below our level of support, pretty much. 158969. Yep, just directly below our current level of support. I'm pretty comfortable with that because if we do end up breaking that, that would be a rejection of this upper Kumo cloud level of support. And if we go back to our 3-day, and look at those EMAs, that would also be congruent with a break of the 8 on our 3-day time frame. So if that happens, then again, I would expect us to go back down and retest our next level of support, which would be the 3-day 21 exponential moving average and this previous level of resistance right here. That level coming in roughly around 148, I would say, to 145 if we don't have that nice bullish continuation right now. The other way to play this is just to wait for the break of the 3-day 55 exponential moving average as well as the daily 55 exponential moving average to take a momentum breakout trade, which would also be a close above our previous high, which would be a pretty bullish sign. But overall, man, I kind of like this. This looks pretty good, especially on that weekly time frame. Stop loss hunt, not immediate rejection, continued consolidation. You can almost say something like you don't have enough data to call it anything like a bullish flag or a pennant or anything like that. You can make the argument on the 3-day case as well, but you haven't lost any momentum on the 3-day. You haven't lost any momentum on the 3-day. In fact, you just continued to close above previous levels of resistance, and now you're just kind of flirting with your next level of resistance. So if you wanted to be cautious, you would wait for that close above the 55 on the 3-day or the 24-hour. But looking at the 8-hour, which is actually our tradable time frame, I would wait until the daily candle close and the current 8-hour close. See if we can't get what we need to see from Wada Atar explosion here, trading above the explosion level, which actually might be, I mean, it's possible. It just depends on how strong this candle closes, and see if we do not remain above the zero line. Because as you can see, time transformation is trying to give us a nice bullish signal right here on high volume. As we can see, the yellow diamond printing on high volume, but it has the potential to just come right back down below because this 8-hour candle hasn't closed. So we don't have confirmation above the zero line yet. So should that happen, then again, I would manage risk. I would not want to see a close below the 8-hour 55 exponential moving average, and I also would not want to see a close below that level that we said we would be managing risk at. So 157, 158, 1589, I believe. It's dropped down to 157,629 because it's being measured off of closing price. So yeah, 1589, or more broadly, a close below the 8-hour 55 exponential moving average. I wouldn't want to see that. Similarly, I wouldn't want to see us closing back inside the Kumo cloud either on the 8-hour cloud, because we don't really have anything below us on the 8-hour. That would signify a bearish shift in trend. And we'd have to go out to higher time frames, whether we're talking about a retest of the 3-day Tenkan, whether we're talking about a retest of the 3-day 21 exponential moving average. Not a trade you want to be in until you see bullish recovery at this lower level. So hopefully that's clear. Looks good, but I don't see an entry right now. Potential entry here at the close of the daily candle or the close of this current 3-hour or 8-hour candle. 171287. So basically a retest of the range highs is areas where we want to be taking initial profit. And then as we talked about, that higher level above us, if we really are going to break in. Because again, I do think that looks attractive. The R to R looks acceptable to me because you've got a very nice attractive profit target over you because of that shallow area of the volume profile right here. Very shallow area of the volume profile that you're flirting with breaking above. Ed Webb, man, what's going on, dude? Yes, you just arrived, and yes, your name was drawn for the MMO coin giveaway. How do you do it, man? Coley, good to see you, man. Zuhair Nakvi says, crypto fear and greed index showing a decent fear sentiment. Also, BTC MDR fairly bullish. It is. So conflicted about whether you should short a retest of 39.50 or long a retest of 38.50, man. Well, I can tell you what my personal strategy is. In a short, took some profit. Don't see any reason to exit the short. Don't see any reason to go long. And I'll wait until the market proves me wrong to switch my position. Comfortably short. Okay, what else do we got on the schedule? We're almost out of time for today's show, guys. Excuse me. I wanted to look at that. What was it? CPRX? Yeah, CPRX on the daily. Catalyst Pharmaceuticals on the NASDAQ, my good man. I'm actually going to start off on the weekly, bro. Listed on the NASDAQ back in 2006. Been on a beautiful bullish tear, man. So the weekly looks pretty good, but it's at a price level where I want to be careful, man. You're coming back up close to the market high. But again, you never want to be that fool who's calling the weekly time transformation, gave you a beautiful buy right here, and really has been calling the local tops of the markets pretty well. Had your dollar cost averaging in, kind of getting your face smashed in right here, but it's all right. You would have been out of those trades long before. Same there. That probably actually would have probably given you a pretty good trade right there. Yeah, pretty good 15% there. And then called the bottom of the market right there. Pretty good. It's coming into a price area. And again, individual stocks are going to pump, but I'm a little bearish on the overall market on the long term, at least as far as traditional commodities and equities are concerned. So talking about Catalyst Pharmaceuticals, this has got to be a penny stock, man. Nothing pumps 700% in 1 year and isn't a penny stock, 1,000%. So all I can say with this, man, is if you are in this position, definitely an area cresting above previous highs and testing the previous highs on the weekly time frame. So our previous range high, this is actually our range low and our range high. And then we've got our market high over here, which is a different thing. So that happened initially after listing. So this is boiler room type shit. This is boiler room type shit right there. Yeah, I wouldn't want to buy this. It's something I would want to hold. This is definitely an area of the market where, just logically speaking, I'm taking some profit off the table and I'm moving my stop loss to break even, because then it's joyous because you've had a profitable trade. Yeah, everything's bullish on the EMAs. Everything's bullish on Ishimoku. I mean, there's not a whole lot. There's not a whole lot to be done here, man. You just hold on. Just hold on tight, brother. Looking at the 3-day though, you can see us putting in that. You can see, and on the daily as well, you can see us putting in that that spinning top, or you can see us putting in that doji at the top of an uptrend, which is basically exactly what we just put in for Bitcoin, and that led to a little bit of a drawdown. Again, one of those reasons. This is definitely an area of the market where I would want to enter. I need to see a little bit of continued consolidation at this higher price target to be confident the price is going to make another leg up. And again, just coming into one of those areas where I'm like, okay, going above previous highs, retesting pretty significant resistance up here. Could be good, but it's definitely something that gives me pause for the cause and caution. And we can see where that negative sentiment is coming in on the daily. See, the last TT trade to the short side would have made you about 5.96. This would have been a loss. And we'll see how this one plays out. All three of these were winners, so that was a good trade. That was a good trade. That was a good trade. Yeah, I need more market data, man. I need to see some consolidation. I need to see consolidation at this previous high, because we've taken out this high right here. So you're kind of ripe in that area where a lot of people are going to be buying into what they think is a breakout, and likely filling the pockets of institutional order flow trying to take the trade to the downside. So I would want to see the weekly close of this. I would want to revisit this on Friday evening after the market's close. I would want to revisit this on Friday evening. If we trade below 4.46, I don't want to touch it. If we trade below that level, I don't really want to touch it. Actually, that's weak support, to be quite honest. Let's be more realistic here. That's weak support. This is strong support right here. So if we trade below 451, sorry, I become hesitant. If we trade below 398, I don't want to touch it. But bullish reactions off either of these levels, we could take it. And if the weekly close is strong, if the 3-day shows this nice consolidation, you could be more aggressive and wait for the close of the 3-day. So 2 days from now. If this consolidates here for good 4 or 5 days, then we could see another leg up. But right now, yeah, it's nothing that I want to touch. Cuidado. Bit Badger 1. I'm still bearish, man. I think we're going to see some lazy listing to the upside, and willing to be proven wrong, man, but nothing that I'm going to be entering long off of right now. Stop loss is at break even. I might consider exiting my position should we come up here and close above my first take profit level around 39.59. But until then, I'm just going to consider this a brief oversold reactionary and not indications of continuation of an uptrend, because I don't think we're in an uptrend. I think this was the beginning of a downtrend. This movement to the upside was to trap longs, and I'm going to view this as a bullish reactionary off of a high volatile movement to the downside, just like we saw here, just like we're about to see here, in my humble opinion. Same for Ethereum. although Ethereum looks more bearish. You guys know how I feel about trend lines, but broadly speaking, this is kind of how I see Ethereum playing out right now. High volatility movement down, lazy listing up, high volatility movement down, lazy listing up, high volatility movement down, lazy listing up. 2 steps down, 1 step up, guys. 2 steps down, 1 step up. Okay, looked at Zem. I looked at CPRX, stock. We just kind of went through Ethereum. We went over Bitcoin. Didn't get to look at everything that I wanted to look for Bitcoin, but that's okay. Bit Badger says, great, so am I. Hell yeah, welcome to the team, man. That's pretty much it, man. I think it's gonna be a lazy day. Let's go look at that. Let's go look at that morning trade that we put on in the premium trading group. Yeah, beautiful, guys. Plenty of listen, guys. If you guys didn't, I mean, that's freaking gorgeous, dude. Look. So I was just looking at this on the. I was just looking at this a little bit ago, and it didn't look like you guys would have gotten the opportunity. But yeah, I mean, right before the show started, I called LUN BTC. Multiple reasons for that, but basically based off fundamentals. And I mean, just beautiful pump, man. Beautiful pump. So let me actually update that for the. How much do we make on that? This is where I actually entered right here. So I didn't actually get as sweet of an entry. Yeah, about 12% trade we just put on this morning. Not bad, guys. My work for the day is done. No, I'm just kidding. Cool. So I'm going to continue to play the altcoins that come across my radar. I've kind of got my alerts going a little crazy over the last few days. Kind of monitoring a lot of low sat coins, which is kind of where my focus is right now. Higher risk, higher reward, guys. Remember, with low sat coins, they move really. One sat movement is pretty significant, right? But you got to go where the capital's flowing, guys. And I think you're going to see the liquidity flow into the low sat coins over the next couple of weeks. So just make sure, guys, as we continue to say, trading, we're playing the long game here, guys. We're playing the long game. So even low sat coins, even though they have, they'll put in like just ridiculous gains like very, very quickly, you got to position appropriately, right? Because again, something like a 3% movement, Ethereum putting on a little bit of a bullish try there. Kind of late to the party because Bitcoin already put that on. So something like a 3% movement or a 2% movement on XBT or Ethereum USD on the perpetual swap contract should ideally give me the same amount of profit or similar to something like a lunar trade, which I just took this morning, right? But the point is, my risk should be the same. right? Just because my stop loss for something like Lunar might be something like 12 to 15% away, and my stop loss on something like XBTUSD might be something like 1.5% away after I've seen a high already rated, for example. My risk, so the risk to my portfolio, the risk to my capital should be the same, right? This is one of the most biggest mistakes that I see of individuals that try to trade, high asset risk or high risk assets, which in general cryptocurrencies are, but when we're specifically talking about low sat coins, so things that move, like BTT is a good example. One sat movement on BTT is going to be 5%. We've traded BTT like 2 or 3 times. So you need to, even so on some of these low sat coins, your stop loss has to be 10, 15, 20% away, but you need to position size appropriately. So if your stop loss is 20% away, that means you need to lose 20% on less amount of money, which would be what 2% of a regular position size would be, for example. So just make sure you guys are position sizing appropriately. That's the most important thing. Money management, if you want to be a profitable trader, is more important than entries and exits, period. Ed, we're glad to see you here, man. Sorry, guys. It's 2:02. I'm actually past time, so I apologize, man. I can't look at that stuff. I got to got some stuff to do. Today's going to be a busy day. But overall, yeah. So let's final closing thoughts. Not entering into long positions on Ethereum or Bitcoin. Holding my short open at the current moment in time. Lun was a good trade. I think that there's going to be opportunities in the low sat coins over the next few weeks. That's kind of what I'm going to be focusing on alternatively, as well as working on my indicators. So I had a breakthrough last night with the new Minx indicator, which is pretty good. So again, that should be definitely on track coming out toward the end of April. For those of you who are in the premium trading group and watching, I did update time transformation to 0.1.2. So I made aesthetic changes that make it more easily visible on multiple different backgrounds. I know a lot of you are having trouble seeing the trigger line on using a dark theme for TradingView, and some of you didn't even know there was a trigger. So how do these signals come up? It's magic. No. So I made them yellow and cyan, which was kind of the default for those of us that have been messing around with this. I updated the entire script to Pine script version 3, which will make it easier to update in the future. And I completely rewrote the code for the Heikinashi multi-time frame function. So it's actually more accurate and switches quicker. So it's going to be a better trending indication for you guys to be entering your trending positions on as well, in confluence with the time transformation indicator itself. And then I completely updated the multi-time frame input section. So it's much more intuitive now to select different time frames for both the Fisher and the Heikinashi. So powerful little tool. And then I made the input section more intuitive, just easier. And then I fixed the messages on some of the alerts because I know some of you guys aren't native English speakers that are in the group. And again, I want to make it as easy as possible for you guys to make money. So I updated the messages. So instead of BTFD and STFT, which was buy the dip and sell the top, it's buy alert, sell alert, things like that. Thank you guys. You guys have been awesome, wonderful, and fantastic. Of course, this has been another Breaking Bitcoin Market Update. Thank you so much for joining me for your Tuesday afternoon. I'm Justin Wise, lead analyst and senior mentor here at Cracking Cryptocurrency. Hopefully today's show has helped crack cryptocurrency for you. If you have any questions, comments, thoughts, opinions, suggestions, or sarcastic remarks, maybe even death threats, leave them in the comments section down below. Now, again, I know a lot of you guys don't leave comments because you can't leave a comment directly in the show, but if you just wait a couple minutes, you can leave a comment after the show. I'd love to hear your thoughts and opinions. And the question of the day, sorry to revert back to this, I think, but no, you know what? No, we're not going to do that. We're not going to do it. Is Bitcoin going up? Is Bitcoin going down? I think Bitcoin's going down. So, again, I love your guys' opinion. Come in the Discord, discord.crackingcryptocurrency.com, and make sure you keep the conversation going. You're going to find the tools and resources that you need in there. I think they're going to help you out. But the question of the day is, what are you guys using to look at volume? What's your volume indicator? All right, what's your volume indicator? You should definitely have some eye on the market. Wada Atar looks at volume. Regular volume indicator looks at volume. What are you guys using to look at volume and volatility? What's your measurement of volume and volatility in the market? Because you need gas in the tank to make a profitable trade. So I'd be interested to hear what your guys's volatility indicator is. Of course, I will pick a random commenter in the comment section and tip them some crypto in the Discord, as I always do, guys. So thank you so much for your support. If you have any questions, please direct them to me in the Discord or in the comment section, or you can reach us at contact@krakencryptocurrency.com. And as always, if you'd like to trade along with us in the premium trading group, get access to our indicators and strategies, as well as our private community and the webinar series, you guys can check out premium.krakencryptocurrency.com. Shout out to all you guys as well. You guys are the best bunch of guys that I've ever worked with and had the pleasure of working with. So, all right, guys, that's all for me. Hopefully today's helped crack cryptocurrency for you. And until tomorrow, guys, trade safely. Just stick to the trending indicators.